I invest 50 to 60% of my take-home income every single month. I'm a believer in what Naval Ravikant said, and that is that people that live far below their means enjoy a freedom that people that are busy upgrading their lifestyles every year just can't fathom. And for me specifically, this freedom showed up in three ways. The first one, and it's very important to me, I managed to travel to over 130 different countries, but more on that on the video over here. Number two, through my career, I had the opportunity to choose jobs because I liked them and because I would find them fun and not because of the money. So specifically, I have turned down offers for 50% more salary down because I didn't potentially like the job, or I had to work too much, or I had to commute very long, or I just found the colleagues boring. Just said, okay, no, I'll just focus on what I like. And the third one is that through the last few years, I have saved enough to say, if I want to take off 10 years of work, I can already do that. And with all the peace of mind that comes out of that. And mind, I am not a savvy investor. I'm just a guy who believes that if you invest high in both absolute amounts, so both in euros, in dollars, in krona, and also high in relative amounts, so a lot of your take-home income is invested and not used and spent, and do this for the long term, things will kind of take care of themselves and you'll be good. If you like this content of investing and personal finance, make sure you click subscribe below, make sure you like that video. And if I see enough traction on this, I will be doing more on these topics into the future. So do let me know. Three things before we start. And the first one is that I have a lazy strategy, or what I call a lazy strategy. I work for my investments to be as automatic, hassle-free, and frictionless as possible. What this means is that I have a setup that are processes that take money from my bank account every month, send it to my investment broker, and the investment broker invests it automatically. And basically, most of my money and my investments are done like that. I don't really think actively on the investments. And also, I buy and almost never sell. So if you're looking for actively managing your investments, this is not the right video. The second thing is that my strategy is Denmark focused. And in Denmark, there are two things you should know. The first one is that in Denmark, you have the highest capital gains taxation levels in the world, or if not the highest, they're close by. And capital gains is the way investments get taxed. And that means that if you think that you're doing a good deal in some countries, in Denmark, you might not because of these taxes. And the second thing is that on top of that, Denmark has a lot of rules and regulations on how these taxes are applied to different instruments, which specifically means is that what is a good investment in the US or in other places in Europe, like it could be in the UK or in Germany, might not be so in Denmark. And if you want to get exposure to a certain market and so on, the way you do it in Denmark will be different from the way you do it in the US. Something to keep in mind as well. The third point is that I am not a registered investment advisor. If this is for informational purposes only, if you're investing, you're putting your capital at risk, this is serious business. If you are going to do this, make sure you talk with people that are experts on this and they're registered financial investment advisors. Specific to Denmark, as I said, taxes are high. And I want to now spend a little bit of time explaining how the taxes look like. First, for stocks and Danish-based, and I stress Danish-based ETFs and index funds. And what ETFs and index funds are, I'm going to explain in a second. But for those type of investments, you get taxed at 27% for the first 56,000 Danish kroner that you realize. Meaning that you only get taxed on these investments when you sell them. So if you buy and you never sell, you don't get taxed. But when you do sell, you get taxed. For everything that you sell on top of this, with a gain that's on top of 56,600 Danish krona, you get taxed at 42%. Then for almost everything else, so for almost every other type of investment, be it bonds and foreign-based ETFs, gold, real estate investment trusts, and so on, that's very complicated. But what you should know is that you get taxed between 37 and 42% plus charge tax between a multitude of complicated variables, but what you should know is that you pay that amount. And critically, you will pay on a rolling yearly basis. So you'll pay even if you don't sell. So if your portfolio of these investments goes up by 100,000 Danish krona, you'll pay around 40,000 to SCAT even if you don't sell. So you'll have to bring up the money from somewhere else, or sell the investments to pay to SCAT, which cash flow wise, not good. When it comes to cryptocurrencies, so Bitcoin, Ethereum, and so on, you only get paid again when you sell your crypto, but you get to pay income taxes on these gains that you have on your cryptocurrencies. So if you bought your Bitcoin and sell it now, and you pay, for example, top SCAT, so you're paying for your salary, that top bracket is around 50 something that you're paying already, you'll pay 50 something % on your Bitcoin gains as well, critically as well. The last one as well is that unlike most of the countries, Denmark also taxes your pension account. So if your pension investments go up in a specific year, you will get taxed 15% of those investment gains on a rolling yearly basis as well. With all that clear, I'll tell you now exactly how I invest myself. And this is that I focus on 3 specific buckets. I spend most of my capital into index funds. So I invest between 65 and 70% of my monthly investment capital into index funds. And index funds are what you want to have when you want to have a, let's say, that we call the lazy strategy, the automatic strategy. Because when in index funds, what you do is that instead of focusing on an individual company like Apple or a Google or a Exxon and so on, what you do is that you buy the market as a whole, or you buy a subset of the market. So for example, there's something called the S&P 500 index. When you buy the S&P 500 index, what you do is that you buy the 500 top companies in the US as a package. And by doing this, instead of believing that one specific company will do great, what you do is that you believe that the whole market, so the market of the US economy as a whole, will do good. And this has been proven to be a lot less risky than just focusing on just one thing, because the odds are that some companies will overperform the market, but as a whole, it's hard to find specific companies that will do better than the market as a whole year after year after year after year. With that said, there are some drawbacks on index funds, but by and large, for normal people, this is an easy set it and forget it investment strategy. And when you hear, for example, a person like Warren Buffett or Charlie Munger, like kind of the investment gurus of the highest level, they will also suggest you, unless you're a super professional, just buy index funds, set it and forget it, and that's how you go. And again, that's how I spend most of my investment capital. The second bucket is, yes, to pick individual stocks. I spend between 15 to 20% of my investment capital picking individual stocks. This is not something I do every year, but for example, last year that we had a pandemic, where you could basically see that some companies would do good in a new context and some companies would not do good. Just go and focus on specific individual companies. I'll tell you my specific picks later in the video, but by and large, this is just a small portion of my investments. And the last one, around 10% of my investments, 10 to 15%, depending on the month as well, is on cryptocurrencies. These are the Bitcoin, the Ethereums, and so on. I still invest in those myself every single month. 2 more notes. The first one is that these ratios are not set in stone. So yes, I invest most of my capital in index funds, but it has been some cases where I invest all my capital in index funds, or there'll be some months that I would just be only picking stocks or only doing cryptocurrencies. But by and large, on average, this is what I have been doing for the last few years. The other note is that there's a lot of things that I don't do. So I don't short stocks, I don't buy bonds, I don't buy real estate investment trusts, I don't buy gold or things like that, I don't buy commodities, I don't buy options. There are a lot of investment instruments that can make you a lot of money. But at the same time, you need to research, you need to learn, and you need to find some kind of advantage for yourself in those markets. I didn't get the opportunity to do that yet myself. It was not something I was fully interested. So do know that by following my strategy, you could be leaving money on the table. But again, that was fine for me because I just wanted a simple, easy setup. Specifically for index funds, I use something called Nordnet. And Nordnet is a website that has 2 great advantages for us who live in Denmark. The first one is that Nordnet reports your taxes automatically to SCAT. So if your investments have had a specific appreciation, or you have sold anything or whatever, Nordnet will automatically communicate that to SCAT, and you basically don't need to do anything to your tax card. Everything will be filled out via automatic information transfer between Nordnet and SCAT. It's not that they'll have to pay taxes, but it just removes a lot of the hassle and friction and potential issues with the tax authority when you have a company like Nordnet doing all the paperwork for you. The second thing I like about Nordnet is that in Nordnet you have something called månedsopsparing, which also translates as monthly savings, and it's a system that they will basically invest money for you automatically into up to 4 instruments, in my case 4 index funds. And this is again the critical part of the system, because you send money from your bank account, then it goes to Nordnet, and Nordnet invests it automatically. And the critical thing about this monthly opsparing as well is that it does it for no fees. So for buying things through money opsparing, you don't have to pay like a transaction fee, which otherwise in Nordnet are pretty high. In my case, individually, I buy 4 index funds. At the moment, I have exposure to one called US Growth, which is mostly the tech and high growth companies in the US. Then I have one called Global Actions at Minimum Risk, which is a portfolio of over 1,000 companies, mostly focused on the US and Europe, more of the, let's say, value stocks. And that means that big established companies. And then I have less exposure on two specific segments, which are one, the emerging markets, so that includes China, but also includes Africa, South America, and so on. And a last one, which is a little exposure to the Danish OEMX, which is the Danish stock market, which has also been doing quite good in the last few years. One thing to note about Nordnet is that if you don't live in Denmark, so if you live in Belgium or Germany or wherever, you're probably be a lot better off using a different broker like the Giro, for example, in Europe, and different funds. For example, there's something called Vanguard, which have a lot better fees than these SPAR index ones. But given that I live in Denmark and I like to have this connection with the tax authority and my taxes to be as automatic and also as advantageous as possible given the circumstances, Nordnet gives me that flexibility. But even now, like in the last few years, there have been a lot of more competition and better deals coming up also in Denmark as well, and I'm actively investigating that. If you have any, do leave it in the comments and we can follow the discussion. The way you get taxed for these index funds in Denmark, as I said, is that you will pay 27% at the beginning, and after a certain threshold, which I said it was 56,600, you'll pay 42%. One thing to note as well is that you will only pay the moment you sell, or you get dividends. These SPAR index funds, for example, they will pay a dividend every year, and you'll have to pay taxes on that dividend. Again, 27% up to a certain amount, and if your dividend is big, you'll then pay 42%. For individual stocks, I use Revolut. If you don't know Revolut, I don't know where you have been living, it's a fantastic tool, especially if you like to travel, because basically when you want to buy some, for example, if you live in Denmark and you want to buy something in euros, you need to pay a 1.5% fee on top of that to your bank. Or even if you want to buy something in dollars or another currency that's not euro or Danish krone, you need to pay 2%. When you buy, for example, with Revolut, that fee goes to 0. Or there are some caveats, but basically like you save yourself 2% every time you go and buy something in dollars, which is absolutely great. But on top of that, great deals about Revolut, which I'll maybe make a video about that in the future. In Revolut, you can also buy stocks. And the benefit of buying stocks in Revolut is that you don't have any fees whatsoever. Plus, also you have these currency conversion benefits. And that makes Revolut the closest thing that we have in Europe, or at least in mainland Europe, to Robinhood in the US. Neither to say what there's a lot of discussion about Robinhood as a whole, right? But it just makes it easier for normal people like us to go and invest in companies. And specifically myself, as I said, like especially last year when I know or when I could see that the pandemic was hitting hard and there were still going to be some companies like Amazon, Shopify, Peloton and so on that were going to do good in this pandemic context, I just put some money into that as well. And I still do every month, just find one or two companies and just bet a little bit of money into that. If you're curious, for example, the list of companies I'm investing in at the moment is Apple, TSCM, which is a Taiwan semiconductor or microchip company, Square, Shopify, Spotify, Palantir, Airbnb, Tesla, and some one-off smaller investments. Again, don't take my investments as a genius level at whatever. What I do here is I also buy and believe these companies will do good over the long term. And as I said, almost never sell. So no GameStop and anything like that from my side. If you're new to investing, though, I would just recommend you to only focus on index funds. You don't need to get this exposure to individual companies at this stage. Again, you'll do pretty good for yourself on just index funds, and you don't need to be greedy enough to just try to pick specific companies unless you really believe that they will do great. And that is not when you just read a meme stock or whatever, but it's something when you know the company, you know them well, and you have used the product and believe that, okay, these are undervalued and they can do great. One thing as well to note is that Revolut is not a tried and true investment place as Nordnet could be. So I have read some horror stories on Reddit and other places of people just being locked out and not be able to access their funds. Just watch out. Again, most of my money is in a place like Nordnet that in the end of the day has a customer service and it's closer to Denmark. I mean, basically you can go and knock on their office and say, hey guys, what's going on? If you get any problem with Revolut, that would not be the case. So something to keep in mind as well. Then my third bucket, as I said, is cryptocurrency. And this is a bit of more of a obscure and controversial topic for a lot of people, right? But for me, I have been exposed in some kind of way to cryptocurrencies for a long time since I like technology and I have a lot of friends that have been involved in one way or another with the crypto space. So I have been putting, as I said, like 10 to 15% of my money into crypto on and off through the last few years. And this means, for example, Bitcoin, Ethereum specifically, but also every once in a while, one of the, what they call altcoins or one of the new projects. Some few things to keep in mind is that I use an exchange called Coinbase to do this. Coinbase is like Nordnet, is easy, it's user-friendly, it's easy to set up automatic investments. It's just not the cheapest. So the fees to buy cryptocurrencies in Coinbase are not the best. But again, it's one of the gold standard of cryptocurrency exchanges. It's one of the places that a lot of people just trust that the money will stay there. And a lot of the people that I know that have high net worth in cryptocurrencies, they just use Coinbase. And that's what I would recommend to most people. That's what I told my friends to do as well. When it comes to Coinbase, just keep in mind as well that you can set up automatic buys of these cryptocurrencies as often as you want. You can set up per day, per week, per month. I just do it per month. Sometimes it could be good to do per week, depending on how much capital you put. And then again, send money automatically from bank account, put that thing automatically, set it and forget it. Cryptocurrency, there's a lot of up and downs. At the moment I'm recording this video, Bitcoin and the cryptocurrencies went down like almost like 30-40% in just a week. It's a wild ride. Don't expect to go riches here. Just if you believe like me that this is a valuable technology and it will be doing good in the long term, just buy, sit and forget it, and just, as I said, don't check it. If you keep doing this for 1 or 2 years and then like 2 years from now we have a new Bitcoin bubble, you might do good for yourself. And yeah, this is something that I believe myself it's at least worth spending some money on as well. Just keep in mind as well, what a lot of people that are into crypto tell you is that this should be just fun money. Don't put your life savings or money that you really need into crypto. In my case, it's money that if it all goes to zero, I hope it doesn't, but if it all goes to zero, I should be completely fine without. When it comes to taxation of cryptocurrencies, as I said, you will be paying on top of your income taxes. So if you're already paying a lot of income taxes, you'll be paying around 50% of your Bitcoin or 50% of your Ethereum when you put it on sale to SCAT, which is pretty nasty. Now, just for you to know as well, there's something called decentralized finance within the crypto space. And what this decentralized finance means is that you basically can get loans with your cryptocurrency as a collateral. And if you do that, you could argue that you can get a loan on your crypto without having to sell your crypto. And because of that, have a better tax situation than if you wouldn't. I haven't tried this myself, but I know a lot of people are doing this to maximize their tax advantages. 4, and I said there were only 3 buckets, but I have a 4th bucket I have been beginning to experiment this year, and that is something called BlockFi. And in BlockFi, what you do is that you can deposit a crypto stablecoin, which basically means that you, in effect, what you do is that you deposit US dollars and you get 8% per year in interest, which in dollars, it's a lot of money. So in Denmark, as you know, you pay negative interest rate over 100,000 krona in your bank account. What if you just take all that money and put it in BlockFi and get 8% on the dollar instead, which is fantastic. I mean, you're not getting the risk of, Bitcoin going up or Ethereum going down or crashing and so on. What you do is that you're putting dollars and getting interest in dollars via a crypto protocol, but still, it's very solid. And I thought, okay, what's the catch here? And seems to be that there are no catches. Again, do your research before you invest, right? But I know a lot of very rich and smart people that have a lot of their capital invested in BlockFi. There are a few more thoughts I want to share before we close off this video. And the first one is that I invest this much because I own my apartment and I have very low monthly expenses for my flat because I have an interest-only loan. More on that in some of the videos over here. But just for you to know, that's one of the reasons I managed to have enough capital to go and invest. This might not be your situation if you are renting, and if that's the case, maybe you should consider buying a place or figuring out your housing situation before you start investing big in the stock market. But in the meantime, while you're, for example, saving for the down payment, this is a solid option because at the end of the day, one of the advantages the stocks have versus owning a flat or owning a property is that if I want to sell all my stocks tomorrow, I can. If I want to sell my house, it just takes a bit of friction and fees and so on. When you sell your investments, it normally goes quite smooth. Taxes and fees otherwise, but normally it's something that you can execute very fast. I also want to note that I only started investing big around 5 years ago, and I'm 34 now. So just for you to reference that, it's not that you need to start in your early 20s to get the massive benefits. Just keep in mind, yes, that if you start early, you'll get the best of compound interest, and if you start late, you'll just need to invest bigger to catch up, right? But just something to keep in mind that it might take a while for you to get your footing, but once you do, just do it regularly. Don't stop and keep investing. Keep in the index funds, keep in the stocks, do your double in crypto and so on. But just set it and forget it. Just see it as part of your plan to financial independence. last point I want to share, and it's absolutely critical, is that if you have limited resources, so if you don't have so much money yet, what you should do perhaps is to start investing on yourself instead. So instead of investing in index funds and so on, which maybe you should still do both, right? But then focus a lot of more energy and money and capital and so on and getting things that will help improve your skills and it will help you improve your career. So the type of things we are talking about are, for example, getting returns by investing in coaching, in building a network, in getting specific certifications, in courses, in learning and development, and so on. For example, one of my recommendations, in case you want to become more productive and you want to become a high performer and get skills that you can leverage into any job, is to sign up to my email list, where I share a lot of my best tips on productivity and high performance and all this type of stuff. And I have even some videos as well that are free here that you can learn about it. But those are the type of things that if you can spend the money on that, and it will help you get better jobs or better opportunities and so on, then you will have them more capital and then you can invest. So critical to invest in yourself as well. And to finish off, and now for real to finish up, let me close in with two quotes, and I'll read straight from my phone. The first one is from Nassim Taleb, and he notes the central asymmetry of life, what he calls the central asymmetry of life. And that is that in a strategy that entails ruin, benefits never offset the risk of ruin. So don't be greedy and play the long term. And the last one, just a food for thought. If your fingers sharp, take a note of what Scott Adams, the creator of Dilbert, had to say. And quote, "Most people think they have a perfectly good bullshit detector, but if that were the case, trial juries would always be anonymous and would all have the same religious beliefs." And that's it from me. Thank you so much for making it this far into a very long video. If you have any comments, questions, or whatever, make sure you leave them below. And if you have not subscribed yet or click like to the video yet, what are you waiting for? Please do so. Thanks so much for watching and all the best.